Hello, family. How are you doing? This is Israel here. We are back with another video. So, I thought I'd give you an idea of what it looks like when you're trading in session. So this is a London entry scalp that I'm going to, well, not actually, not that's not true. This was New York last week, New York last night. Sorry, New York yesterday. But the trade is still live, and that's why I thought I'd give you an idea of what it looks like, because the first target of the trade has hit, but I want to show you what a continuation may look like. So we're in gold. Uh, I can show you the exact same in NQ, but we're going to stick with gold for now because I like what I'm looking at in gold right now. So where did I have that gold? Where were we just now? Okay, there we are. Cool. So here we are. Now, I did a pre-week review video, which many of you saw, I hope. If you haven't, by the way, please like, share, comment, and subscribe on all our videos here at Pleuro Markets. It's a brand new channel. The old channel still there, Israel Keys Wealth. That's pretty much like a trading university. This is more of an application channel. This is more of showing you stuff practically that was actually teaching you how it works and building you a solid foundation in the markets. So the setup for the week in both NASDAQ and gold was longs, almost pretty much the exact same play. The week opened up with a gap. I'll just show you this real quick. Uh, took a little trade yesterday to close the week opening gap. Just put that up on the screen. There we go. For those of you who are on the Telegram channel, by the way, we're going to be migrating Telegram to WhatsApp channel very soon. But so this was it. 15 minutes. Week opened up with a gap. And our bias for the week was already bullish. If you look at the NQ video from a few days ago, and so that gap opened up in the direction we wanted anyway. And what we said we wanted to do was to see a 4-hour stop hunt, and we actually earmarked that level in the video. You can go check it out as a potential level that we thought could be tapped on a Monday, maybe even a Tuesday. Well, the market opened up and said no hanging about. It just went straight, tapped it, and gave us a bullish reaction. What do we call a bullish reaction? Well, there's several ways. First of all, on a 15-minute chart, tapped it in, pulled back up straight away, tested it again and pulled back up and broke structure to the top side, right? So that's one of the ways to look. I don't want to array. That's one of the ways to look at it. Another way to look at it, because we're trading multiple time frames, that should be blue because that's intraday. I've got different colors for levels on different charts. Right. So that right there's a bullish reaction for me. From this point upwards, I'm looking for an opportunity to go long at the right level at the right time. Another way you could have done this was to go in a 4-hour chart and just look at the fact that that level was tapped and closed with a bullish, I don't even think you can call that a hammer. That's just a clear bullish railroad up, whatever the candle formation pattern is, right? Followed by an indecision candle and then followed by a bullish candle. So by the time we came into London yesterday, we were clearly looking for a trade, a buy trade. You could go to a 1-hour chart. It all depends on what time frames you like looking at. On the 1-hour chart, we see the same thing. That's the candle that taps. It's then engulfed, and it engulfs on the 1-hour chart with a fair value gap. These are different ways on multiple time frames. But the story here is, by the time Monday opened, So this was Sunday night when the market opens. This is New York midnight. That's 4 a.m. my time. Actually, no, that's not 4 a.m. my time. I've got to change that. Okay, so this is New York midnight, 5 a.m. my time. By the time the week started on a Monday, we were clearly looking for a bull signal. Right? Reaction, fair value gap. Good. Now, where the question then becomes, where do we get in and what is our first, second, or whatever target? Now, I'm not doing anything with volume analysis so far. I'm not doing anything with indicators because we'll get there. I use, especially volume, I'm more and more using volume in my trading. I don't use indicators. For me, price is my indicator, volume is my data. Just write that down. I'm going to talk about that in a few videos to come. When I trade, price is my indicator. Now I am trading volume with price as the indicator. I know that sounds crazy. The candlesticks are my indicators. I'm trading volume levels using the candlesticks to confirm. So price action is actually the strongest indicator there is because really, you're really not trading price action. The candles are just telling you what people did over time. That's the volume. That's looking at the volume profile trading activity. So price is the only indicator you need. All right, but I want to show you how to use the indicator called price. Cool. So we have a key level on a 4-hour chart, which is the level we're trading. There's a stop hunt, and then there's a reaction. Now, you could simply, I haven't said this to you so far. If you are a swing trader, you don't trade the 4-hour reaction. You trade the 4-hour change of character and a pullback. So this should give us a nice pullback into this range. And then that would be your signal. Let's assume you get in there, your stop loss is down there, and you go. But we're intra-week, intraday traders. And I'm going to show you today how this actually works for scalping. So came into Monday. Let's go back now to a 15-hour chart because that's our execution time frame. Came into Monday looking for a long. All right, so what are we looking for? This is London. 1 second. So London starts roughly about here. What happened? We opened up London with a consolidation. That's fine. So we then see that both London and Asia, if you throw them together, you know what? Let me put this on for you. So ICT kill zones. There we go. There we go. So that's the Asian kill zone, but it's not the Asian session. The Asian session extends all the way to where the London kill zone starts. So if you take basically the majority of Asia and all of London up until this point, they fit in one nice big consolidation range. Asia and London together fit, I'm going to take this fair value gap off, in a nice big consolidation range. And then we get into New York. So we see the classic patterns we want to see. Contraction, CMERT, that's my, or CMRE, TMRT, whichever way you want to look at it. But I like CMERT. This is my anagram. Contraction, manipulation. What's the manipulation? We take out the high of Asia. Now, you have to be, you've got to be flexible in what manipulation you're willing to accept. You will not always take out the low of the consolidation to go up, or take out the high of the consolidation to go down. That's candy from a baby. The market's very rarely that straightforward. This is a valid manipulation, right? We have price go up, take out the high here, pull back down, and take out the low. What low does it take out? The London kill zone low. So at that point in time, it doesn't need to take out the Asia low. It's taking out a low defined by a consolidation range. And as you can see, it takes it out and then engulfs to the top side. That's it. That's all I needed. Why? Because this was a scalp. And what was the scalp for? Let's take this out the way. What was the scalp for? The initial scalp here, as you can see, was just to close the gap. Now, technically, I knew that was a guaranteed first target, but to be on the safe side, it's a Monday. I usually don't trade on Mondays. I just wanted to close the gap. It's 3.76 in how many hours? So 1, 2. In 2 hours, I was in the trade in the first hourly candle, and by the second hourly candle, I was out. 3 to 1. Bob's your uncle. Job done. Wham bam. Thank you, ma'am. This is precision. This is execution. It doesn't come overnight, and didn't even not even, well, this particular entry didn't even bother with volume. Did not even confirm this with volume profile analysis. Now, as you can see, we've continued this. If you watch the preview or the pre-week analysis, you would have seen us set that level there from a weekly chart. I have every reason to believe, right, that price is headed there on a weekly chart. Let's show you a daily so you can see it a bit more clearly. Okay, so that level there is from here. Actually, I need to readjust it. No, actually, no. I think, no, I got that from a 4-hour chart. 1 second. Let's see. 1 second. Let's see. Where did you come from? There we go. That's it. So that's where it's from. Here. That's closing. Right? Now, this is my kind of gap. The fair value gap is all the way up there. But this is a pattern I've noticed in the market for years where when this kind of thing happens, I call them rotation points. It's not something you want to use the name for. But basically, this low of this candle here, right, pushes up, takes out an intermediate high here, forms a new high, and then falls through it, creating a fair value gap. I want you to go back over the years of your chart and see how many times price comes and touches and reacts there. So that was I had a scenario for a bullish week. I had a scenario for a bearish week. In a bullish week, that was going to be my first target. I just wanted to get from here where the week opened to there, and I was going to be out. And as you can see, I could have stayed in that trade. I didn't. I wish I did. I didn't because I didn't know if price was going to take out this high and come back in. If this was a Tuesday, I would have been in all the way. But it just continued. It hasn't given me a pullback opportunity, which is fine. 3.7 to 1 in 1 day's work is not bad. Now, with that being said, today I have been quote unquote on the juice on gold. Pretty much the exact same analysis play. Gold and NQ are moving almost like twins this week. So there we go. Gap. 1 second. Week opens with a gap. It came back to fill the gap. I took that on NQ. There was no need to take it on gold because it's the exact same play driven by the exact same market forces. Both of them have the U.S. economy as a factor for their moves. You're pretty much being exposed to the exact same risk. All right, so this is today's trade. So this was yesterday night, New York on gold. So I'm going to build this up from scratch. Pretty much the exact same analysis, but let's build it up from scratch, shall we? Okay, so this was analyzed. By the way, I did an analysis video on gold, which I couldn't post to you because it had audio. So the same video I did for NQ, I did one similarly for gold. I was going to post it yesterday morning. I couldn't because I realized that I didn't capture the audio. So let's do it real quick, real quick. All right. So This is gold. Let's get rid of all that and just work our way from the beginning. So the exact same thing we did in NQ. What's gold doing? Those levels are from the video I did that I couldn't post. What's gold doing? Well, this is what gold's doing. First of all, it's taking out an intermediate low. This is a weekly chart, right? And it's reacted very sharply. It's reacted very sharply. Now, this level here, no, there's no, my fight, I'm not gonna, do I want to show you this? No. No. Okay, fine. It's not any special anyway, but there you go. So, right? And usually when you have two candles right beside each other like that, you just extend them, take the bodies of the candles. So there's your order block. Fine. Now, what I wanted to show you is there's a more refined order block sitting in here. That candle there is what sponsored this move up. So basically, that's your level. Go do your homework in that. So, got a reaction, fine. So, we kind of expect this week to either be a bullish continuation, or we could come back in and test from here to here. This entire wick, right, is something that could be retested. Just bear that in mind. It could be retested. Now, this didn't exist when we started the week. So the question then becomes, bullish or bearish week? If it's bullish, we're going to have a bullish candle. It's going to open, find support, go up, find resistance, close back down, live 2 weeks. If it's bearish, the exact opposite. So we started off with a bullish hypothesis. So let's refine our levels, go to a daily chart. So this is, we've just transposed now the weekly levels, and this, anything over 4 weekly should be in purple. No, 4 hours in purple. Anything over 4 hours should be in black. Right, so those are the levels we've just drawn on the weekly chart. That's what it looks like. All right, so this was Monday, this was Tuesday. This is where we were. And I said that to sponsor the move up, I expected us to take out that. That's a swing low. To dip into it, push up, and then we were going to try and get to at least here as a first target, right? So that's it. That's a trade idea. That is a very valid trade idea. It's short, it's sweet. You can do it in 1 minute. So we've got our levels from our levels charts, weekly and daily. Our signal charts, a 4 hour chart. What are we looking for? A liquidity sweep of a liquidity profile. So in this case, a 4 hour low, and this is what we said at the start of the week. It's the exact same play as NQ. Well, I said we said this, but you never got the video because the audio wasn't good. Now, with gold, it made a lot more sense that this was going to happen on Sunday night or very early Monday because that level was very, very close. Also, you will notice that there is a nice, juicy order block just there. A 4 hour order block just there. Cool. So, price actually gapped down. We gapped into this liquidity profile. We didn't tap into it. We just gapped into it. Also, you notice that there is a consolidation piece there. It doesn't look obvious on a 4 hour chart, but on a 15-minute chart, you will see it. So that's it. So we go down now, starting the week. We look at our execution chart. That's a 15-minute chart. And what do you know? Just like NQ, there's your consolidation. pay attention to what day you are in the market phases: consolidation, manipulation, expansion, retracement, target. What day are you in? We ended the week in a consolidation. We started the week with a gap, and then that gap was filled on Monday, right? But it was filled via a consolidation. So I didn't take this trade in gold like I took in NQ, because once we took out the market structure there, right, price went into consolidation. So I waited at the start of the day. And then as the day came to a close, we see exactly what we're looking for. Now, I want you to look at this, because I haven't shown you this so far on this channel. I've done this several times on the Israel Keys channel. By the way, most of these videos, for the first few videos on this channel, the other channel will be a collaborator, so you get to go study the university grade education and trading you got there. But look at this. The exact same pattern repeats itself now on a 4-hour chart. And I'm using this because this is how, the same way you do it on a 4-hour chart for an intra-week trade, you can do it on a 15-minute chart for a scalp. And if your 15-minute analysis is being driven by your 4-hour analysis, even better. So we opened, again, I'm going to show you the market kill zones. All right, so Asia trended. London ranged. This is gold. This is not EU or GU. Many of you who studied ICT's work years ago got stuck in the concept that you have to wait for Asia to range. That makes sense when you're trading EU, GU, cable or fiber, EU or GU, because you have a European and a North American pair side by side. You would expect European traders and North American traders to be out the markets during Asia. This is gold. Gold's a universal commodity. So you're going to see many days where Asia is the dominant trending force in gold. That's just fine. So it trended in Asia. So that's the trend. It went into a range in London, right? And then this level here, I'm going to adjust it to here. Why? Because this was the London low. So London is acting exactly like you are probably used to Asia acting on cable and fiber. It's the same principle. You want to see a session range. It ranged. We got into New York, right? Now this is the classic manipulation. We took out the New York, the London high. It doesn't mean we're going south. We then took out the London low. Top, bottom. Contraction, manipulation, cleaned out both sides. How do you know which side to go with? Very simple. When it took out the top side, did it give you an entry signal? Yes, it did. Here. Well, it looked like it did, but it fell. This is one of the reasons why I fall for this all the time, because I don't always wait for the candle to close when I'm engulfing, and I'll tell you why later. So I didn't take this trade because I was looking bullish. My bias, like I said, coming into the day was bullish. But if I didn't have a clear bias, or if I was on the other side, I would have taken this trade. I'm going to be honest with you, because I basically just get in when that candle's cleared. And actually, it wasn't cleared. So actually, I wouldn't have been in here. I would have been in once price came and touched past on a stop entry, once it came out of this candle's high. So I might have been saved this trade by half a pip. But it's fine. If you got in here thinking this was a retracement and then going to target, you okay, you take a loss there. That's fine. Everybody loses. But when we come down and clear this place here, right, we then break structure to the upside. It's in line with our directional bias as well. And then you see this here? This is what I'm talking about. This was my entry. If you remember, I don't think I took a screenshot of the trade before we started breaking it down from scratch, but this was my entry right here. The moment this candle crosses, so that crosses, no, that's a fib, sorry. I want to, yeah. So this candle, once it crosses the high of this one, which it's engulfing, there. And where was my initial target? Because I still think, like I said, this has room to run, like I told you at the beginning. But where's my initial target? Right here. This high there. There it is. Right? And again, take off just maybe a pip or two. There you go. That's the target. That's a whopping 66. Now, let me show you a cheat, especially when you're scalping, that will save you false signals like this one down here. The exact same principle you would use on a higher time frame. Look for an intermediate low or high to be swept. See this here? You've established this stop hunt up. It's broken structure there. That should be blue because it is intraday. You should also be blue because you're intraday. Great, sweet. When we come back down, this intermediate low is a sign of institutional activity, even on a scalping level. It's swept, and what do you know? It also shows up in the middle of a fair value gap. Now, this in and of itself is an entire trading, now it's not my bread and butter, but it's an entire trading strategy I teach my mentees. Literally, look, stare at the screen right now. This could be your setup. And this could be your setup without coming from the weekly. If you're a scalper, this could be your setup without coming all the way from the weekly. What's the setup, you ask? Well, stop hunt, change of character, market structure shift, retracement, intermediate low, nestled in a fair value gap or an inverse fair value gap, right? It could also be in a breaker order block. That it could have been there, right? Could have worked there. Whatever it is, some form of intra-range liquidity, fair value gap, inverse fair value gap, breaker, all that kind of good stuff, even order block. All right, but make sure that an intermediate low is taken into that liquidity profile. In this case, I forgot to put that back. It was this fair value gap. And notice what's going on here. This intermediate low formed in the fair value gap. It was just retested, but it took out that there. And then there is a bullish engulfing to the top side. That's a scalp all by itself. And you really don't need a higher time frame. Probably I'll do an entire video on this. You really don't need a higher time frame bias for this strategy. You can actually get your directional bias in session. I've taught this before by looking at how the session you're in interacts with the session that ended before. But anyway, entry there on the engulfing of this candle there. So I don't wait for this other candle to close, is my point I'm making. I don't need it to close. Price is taking out that already. Yes, you'll have a few false signals, but you will also get yourself far better risk management on the majority of your trades. And where's my target? There. Wham bam, thank you ma'am. 6.2. Now, you can see that something's going on here. Now, I'm out. And like I said, I repeat, I am not offering trading advice, so I'm not going to show you live trades. I may show you live results from time to time, but I'm not going to show you live trades. And I don't think I really want to do that because I'm not trying to, this is not a genital measuring contest. You won't see me posting pictures of myself with nice cars and nice houses. I've got a very nice car or two. God's been good, including through trading. House is not that bad. That's not what we're here for. I'm not trying to train you with greed because that's the same force that will kill you in the markets. All right. Now, target was hit here. And notice what happens when we got there. The question then becomes, so we're out here. Question then becomes, is this a reversal or a continuation? Because you will argue and be correct, so let's get rid of this now. You will argue and be correct that we have now broken structure with a change of character to the south side. And so ideally you would expect price to fall back down, and it could fall back down because if you take this as an impulse leg on a Fibonacci, if you take this as an impulse leg, we are due. In fact, this has already been a 618. So we've actually satisfied the 618. Now, the reason why I'm suspicious that this is going to continue, and suspicious is the word, I'm not sure. Remember, I started off the week expecting this as my top end target. In essence, if I could have gotten from here, so like I said in the previous video, when you're trading, ask yourself, are you a swing trader, an intra-week trader, a day trader, or scalper? Across, if you're a swing trader across a month, if you're an intra-week trader across a week, if you're a day trader across a day, or if you're a scalper across a session, you got to map out the points that you believe are the boss terminals of price. For me, coming into today, the terminals were here, down there, and up there. You don't need to go from A to B. You don't need the whole range. You need a sizable chunk of the range. And if you remember my entry, let's put that trade back in. My entry was here on this candle. Once it engulfed that before it closed, my stop was under that low. And my target was this high there, which I got to. Now, I didn't start from down there. I waited for price to tip its hand. I'm trying to get up here. I don't need to take it in one trade. I can be patient. And part of being patient is understanding that at some point we are due a retracement. Like I showed you just now, I'll show it to you again. From that impulse leg to that, so from there to there, from that impulse leg, we were due some sort of beneath 50% retracement. We've actually gone to the 618. Would I have loved the 7.8? Yeah, but 618 is not bad, and we've popped off back there. Now, and we still believe that where this week is concerned, there is room to the upside. We could be wrong. You don't try and predict in trading. You just make an informed hypothesis and prepare yourself to take advantage if you're right or to stay out if you're wrong. You can see the exact same things happen. And if you go to a 4-hour chart, you will notice that that's a 4-hour indecision candle. Look at it right there. It's not a low, but it's an indecision candle. In this session, and you can train yourself to see 4-hour candles as pretty much sessions or kill zones, for lack of a better way of putting it, meaning high activity sessions or kill zones, low activity ones. This was a low activity one. In essence, neither buyers nor sellers established dominance here. Well, on a 15-minute chart, it happens to be a low. As you can see, this is the consolidation I'm talking about. This section of price was ranging. And that's the low of the range. Right? We've now tapped it and reacted sharply. What would I like to see? Market structure shift. I'd like to see price do that. Then that. Maybe somewhere in here. And then give me a bullish engulfing. And target there. It doesn't have to happen. And if it doesn't, I will not lose any money because I will not be in the trade. It may happen and fail, in which case I'll lose 1 to 1.5% of my account at worst. So let's assume that this trade, let's assume the engulfing happens somewhere there, for example. That would be my stop loss. That's an extra 4%. Overall, across the 2 trades, across 1 day or maybe a day and a half, I would have been up 10%. It really is that simple. And like I said, when we start throwing volume profile analysis on this, and one of the reasons why I'm not doing it yet is I'm still refining my edge on volume profile analysis. It's been good, but I want to make sure that by the time I start laying it on these videos, it's airtight. But there we go. So we're ready 6. Let's put that back in. We got in here, remember? No, not you. You. So we got in here. Before the candle closed, as soon as it engulfed that other one, that was our stop loss. And we got out at this high, which was today. So that trade started yesterday and closed an hour and a half or thereabouts ago. No, it's about 2 hours ago. And now we're waiting for a reload. And as you can see, the reload is we've had a consolidation. It formed a low. Then another consolidation. And then price dived down and took out this low and has reacted sharply. And like I said, I want to see that market structure shift and change of character. We push above these equal highs here. You know what? Let's take this because these are equal highs there. In fact, what would even be better is if it took out this high and then dip back down in. If you want to be real conservative, you would wait for this one. And then hopefully find some fib retracement engulfing there and then target that weekly / 4-hour level. That's how you do it. And as you can see, video by video, we're building on concepts, we're building on understandings, we're taking what we've learned before and applying it. I hope you're seeing stuff that you like. I hope you're seeing stuff that is useful to you. I'll see you in the next video. Happy trading this week, guys. Take care. Bye-bye.